Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon, I'm Ira Dugal. Let's get you the headlines. The Sensex and the Nifty remained range-bound for a second day. Broader markets witnessed marginal gains.
The government may split Coal India and list it as 5 separate units. That's a Bloomberg News exclusive.
All right, Jet Airways is likely to see another forensic audit from bankers after an initial audit pointed to some mistakes.
Suzlon runs in rough weather, defaults on $172 million bond repayment.
Dr. Pratap Reddy decides to sell the family's nursing and medical colleges, all this to reduce debt of Apollo hospitals.
And FDA warns Strides Pharma, alleges the drug maker shredded quality documents ahead of inspection.
All right, let's first take a look at how markets are faring. Yatin Mota is here with us. Yatin, after.
Afternoon, Nira, and if you look at the markets at this point in time, the advance decline ratio is almost 1:1 on the Nifty. More importantly, we are, range bound for the past few trading sessions. It's 30-40 points plus or minus on the Nifty. So that lacklusterness clearly on low volumes continues as far as the Indian markets are concerned. In terms of top gainers today, we have a couple of private sector banks like Kotak Mahindra Bank as well as IndusInd moving in trade 3% up for Kotak. UPL Tech Mahindra and HCL Technologies are the other stocks which are gaining at this point in time. On the losing side, we have Yes Bank, and ahead of the results, the stock looks quite nervous, 4% down for that lender. More importantly, yesterday the stock saw an up move of nearly 13-14% intraday, and after that up move, today probably ahead of the earnings, we are looking at some profit taking which is happening in the counter. GAIL, ONGC as well as Bharti Airtel are the other losers as far as the Nifty 50 is concerned. GAIL down as much as 3%. What's active in trade is the likes of Diwan Housing. That stock is up 14%. Bounce back seen there. We also have Indigo that's almost flat in trade, but that continues to be quite choppy in trade. So Indigo remains in focus. Big Boy Reliance Industries is down 0.6%, but the activity on the turnover front is quite strong. In fact, NSE, the value of shares traded is almost 3,500 crores, so good volume seen there. Idea Cellular is another stock which is active in trade, 2.5% up for that one.
Yathan, thanks for that. Sovereign bonds, meanwhile, in India consolidating after a 5-day rally. 10-year benchmark yields a little change, around 6.36, after dropping 25 basis points in the past 5 trading session. Rahul Satija, Bloomberg News, joins us to tell us what really are the factors at play and what's going on.
Right. So you're right that sovereign bonds are consolidating from a 5-day rally. So yields are up or slightly up today, but it's still near the lowest in about 2 years. What we are seeing is profit taking after yields dropped 25 basis points in the last 5 trading sessions, according to Anup Verma of DCB Bank. The overall trend seems to be clear. The yields will fall according to him.
Okay. Rahul, thanks so much for that.
All right, let's move on to corporate news. Jet Airways will face a deeper forensic audit after an initial audit suggested some anomalies in the functioning of the airline. Lenders who met on Tuesday have also sought additional funding. Monday, have also sought additional funding to keep the company going as it goes through insolvency. Vishnath Nair is here with the details. Vishnath.
Right, so Tuesday is correct. So last evening they met, which is when they decided that there is a need for interim funding, about $10 million, which was part of the entire IBC process. Now, this money will be used to pay some select employees because they need to still keep the back office running. Airline's not running, so for the rest of the operations, they still need some money. Apart from that, they will also put out ads for EOIs by the end of this week. That is what was decided at the meeting last evening. But more importantly, the lenders to Jet Airways, which were led by State Bank of India, will be seeking a deeper forensic audit of Jet Airways book. This stems from the fact that they have already done one round of audits. That was done by EY. It was a narrow forensic audit. This was something that we reported earlier, focused on a very specific set of business verticals. Did not look at, let's say, sales, ticket sales for that matter, when auditing the numbers. They also didn't look at any related party transactions that happened outside of what companies disclosed. So to that effect, they still found some anomalies in the book, which were pointed out to the lenders. So the lenders have now decided that they're going to go forward and do a full audit, just so that they know that that there is no big issue, and they're doing this outside the ambit of the IBC, so that the sale process that is going on at Jet Airways, that remains uninhibited, that does not get impacted if the auditor were to find any kind of financial irregularities at Jet Airways in the past few years.
Vishwanath, thank you for that. A group of lenders, meanwhile, led by State Bank of India, has moved the Supreme Court against the SR Seal verdict. Banks have questioned the equal rights allowed to secured and unsecured creditors. Upmanyu Trivedi is standing by with the arguments of the lenders. Upmanyu.
Yes, that's correct. Lenders have moved the Supreme Court and they are seeking urgent stay on the judgment of the National Company Law Appellate Tribunal. The argument in that strongly worded petition, they have argued that the judgment which equates secured and unsecured creditors is a disastrous move and a shocking move for the whole banking industry, and it will have disastrous consequences for insolvency and bankruptcy codes implementation, just trying to clear up the bad loans, and also the overall economy. So as we know that the judgment not only allowed sale of SR Steel to Arcelor, but also did a redistribution of all the funds that would come from Arcelor for SR Steel. Banks which were earlier getting 90% would now get around 60%, which is equal to almost equal to what the operational creditors or the vendors to SR Steel would be getting. Now banks are opposed to it, saying that this would drastically reduce their rate of recoveries, which will have adverse consequences not just for the banking sector in the country, which is trying to fight one of the world's worst bad loan ratios, but also for the overall economy, because the government might have to contribute towards capital adequacy for banks. The petition would be heard by the Supreme Court on Monday 22, when lenders are expected to seek an immediate stay.
Upmanyu, thanks so much for those details. Suzlon Energy has defaulted on repayments worth $172 million. The wind turbine maker, which is struggling with its debt pile, says that it is working on a holistic solution to the problem. Anurag is joining us with where things stand. Anurag.
All right. So the company has said that, it did not pay the bondholders the $172 million it owes on the convertible bonds. And to just go back in history, this is the second convertible default by the company. 2012, October 2012 to be specific, when they defaulted, it was upwards of $200 million. It was the biggest convertible default by an Indian company at that time. So we do not know at the moment, and the company also hasn't communicated yet to investors about, how it's going to repay the bonds and, what its plans are in the future, if it wants to repay or restructure the bonds. Probably some investors and traders are pinning their hopes that, the acquisition by Brookfield goes through, and that may help the company, tide over some of its problems. But it definitely highlights the strains we're seeing in India's credit markets. It started with IL&FS and now also, going to Divan. So, and, it's just an ongoing saga of companies missing payments.
Anurag, thanks for that. That's Suzlon for you. Cox & Kings have also defaulted on their repayment obligations. Yesterday, the travel agency failed to honor payments worth 45 crore on commercial paper, interest of about 41 lakh rupees on bonds worth 50 crores. Meanwhile, the divestment department has proposed splitting Coal India into 5 separate listed entities. Sources have told Bloomberg News that the aim is to boost competition and raise funds by breaking up the world's largest coal miner. Rajesh Kumar Singh of Bloomberg News now joins us now with more details on this one. Rajesh, what's the plan?
Harsha, so this plan has been, coming up off and on for some time now. The latest one, I think, they began discussing, the finance ministry and the coal ministry began discussing in March, and I think because of the elections, it got slowed down, and again the talks have revived. So the plan is to separate 4 top producing subsidiaries of Coal India, which is Southeastern Coalfields, Northern Coalfields, Mahanadi Coalfields, and Central Coalfields, into separate companies. Also a 5th unit, which is the exploration arm of the company, which is called CMPDI, Central Mine Planning and Design Institute, is also proposed to be separated from the company and listed. So essentially the objective behind the whole plan is to bring in more competition in the domestic coal market. We know that Coal India is almost a monopoly in domestic production. It accounts for more than 80% of domestic coal production in the country. So separating the units and creating different companies would bring in competition, bring in more operational efficiency, and boost the overall coal production in the country. That is the objective.
Rajesh, thanks so much. That's a Bloomberg News exclusive for you. Let's move on. The Reddy family is willing to reduce their stake in Apollo Hospitals to reduce the company's debt and free up a large chunk of pledged shares. Bhuma Srivastava of Bloomberg News, who spoke to Sunita Reddy, the MD of Apollo Hospitals, joins us here. Bhuma, what were the key takeaways?
So the promoter family of Apollo Hospitals has two objectives. One, they want to reduce overall long-term debt, and second is to reduce the amount of pledged shareholding, which was at 78% at the recent levels. So they are looking for multiple options. One is to sell a stake in the holding company. That's one option. They're looking to sell maybe the chain of pharmacy all over the country that they have. The other option is a chain of 13 nursing colleges and medical colleges. Those are the options on the table that they're looking at to pay debt as well as to retrieve a part of the pledged shareholding.
How immediate are these plans? This is something they intend to complete shortly?
The management was a little fuzzy on specific timelines, but they did mention that one transaction to raise cash to reduce debt could be as early as this month.
All right, Bhuma, thanks so much for that.
Okay, let's move on now and talk about Strides Pharma. Strides Pharma was caught attempting to shred quality control records ahead of a US FDA inspection at its Puducherry facility. The drug regulator released the contents of a warning letter that calls into question the company's manufacturing practices. Darshan Mehta is standing by with the key highlights.
Yeah, so Harsha, what happened is last week what Strides said that they have received a warning letter from the US FDA for their Pondicherry facility, but no content was given. Now the US FDA has made this letter public, which indicates that there are issues here and which relatively point to data integrity issues, and this could further escalate into an import alert if Strides does not go in. That would mean a complete shutdown of this plant. What they have said is that the warning letter reveals inadequate control over operations. They speak about how paper was shredded, GMP documents were shredded, there was no quality control, there were documents that were taken just days before the US FDA inspection. So shredding of documents itself sometimes constitutes as a data integrity issue, but it depends on how the FDA looks at it. They also talk about the lack of out of specification details for some of the drugs, which was the real cause of concern and warning letter, for which Lupin got a warning letter last time around. So there are a bit of concern. How big is this plant? The company does not give a breakup, but it's an API plant, out of which there are 10 pending approvals and 6 ANDAs are currently from this plant. What was the timeline? From 28th Jan to 5th of Feb this year, the plant was inspected. On May 18th, they came out with an official action initiated on the plant, which gave them a warning, and finally today a warning letter, and the regulatory system has actually worsened post this warning letter. Now, what does the US FDA want? They want an assessment of the data to the extent of data integrity issues at this plant. They talk about the risk assessment of the potential effects of this and a detailed corrective plan on what Strides expect to do from there. Only one brokerage has come out with a note, Motilal Oswal. They are saying that the financial impact will be minimal, given the fact that there will be alternate sites in which some of these products will be transferred. But the warning letter actually gives about and raises concerns on the regulatory compliance, which is the big negative, and they're saying that if this escalates further, US sales of close to $3 million will be further impacted because of this, and that's why the counter is down in trade today.
Thanks so much for that, Darshan. Freak climatic conditions may derail India's renewable energy goals. Extreme weather events like storms, floods are damaging power projects in the country. Anindya Upadhyay, Bloomberg News, joins us on the show to give us a sense of what's happening. Anindya, interesting stuff. What's going on?
So indeed, freak weather, extreme weather events is really the latest risk to renewable projects in India, and especially because renewable projects depend on weather, sunshine, rains, wind, cloud, radiation, all of these to be able to produce energy. And this year itself, we have we have been told, or we have noticed, and it's confirmed, 2 events which have actually damaged India's flagship solar projects. One in Rajasthan, in the Bhadla region, from where one of the cheapest solar energy is produced in the world. A freak storm called a twister hit Bhadla this May, blowing away panels, hundreds of panels of all the projects that came in its way. The other is as recent as in July, where heavy rains and winds submerged sections of a World Bank funded project in Madhya Pradesh. So now these kind of weather events or freak weather events are only going to go up, climate experts tell us, and this is because of climate change. And India ranks one of the highest in vulnerability to climate risk in several studies made by several global organizations. Keeping that in mind, it is definitely a concern for renewable energy producers in India, also because the industry is working on wafer thin margins. Because to arrive at the lowest, at the cheapest prices in the world, the margins have constantly been coming down, and there has to be a buffer or a scope to be able to deal with such risks, which are only going to increase in future. Even lenders and financiers are kind of concerned about this risk, and this is something that the industry has to think how to cope up with. Back to you.
Anindya, thanks so much for that fascinating story. Yes Bank may report a sharp decline in profit in the first quarter as the private lender continues to provide for stressed accounts. Shefali is standing by with what the markets are pricing in for Yes Bank.
Well, all eyes would be on the asset quality of Yes Bank, because that has really been haunting the bank. And in addition to the asset quality, it's amazing to see how till 2 quarters back they were doing 40%, 50%, 60% kind of loan growth. From that, it came down to about 19% in Q4 FY19, and that is somewhere the expectation this quarter as well. And for all the banks that have reported the numbers so far, the loan growth has disappointed. So that is one trend that I'm looking forward to. And additionally, and obviously the asset quality, the performance of the watch list that the management has been guiding of about 10,000 crore rupees. Just a few days back in an interview, the management said that all these accounts which is the stressed book of 10,000 crore rupees, a watch list, all these accounts are standard as of now, they're performing. So we look out for these accounts, and the provisioning could remain elevated. So we'll watch out for that number very closely. Absolute numbers, gross NPA is one of the brokerages is putting out 3.9% versus 3.22% on a sequential basis. Net NPA is 2.2% versus 1.86% again on a sequential basis. Slippages, very wide range of estimates being put out across brokerage houses, from as low as 500 crores to as high as 4,000 crores against a 3480 crore number that we had in Q4 FY19. Other than that, we can look forward to the fee income growth, which is expected to be weak for them, and margins are expected to stay under pressure. In Q4, we had margins of about 3.1%. So at best, that number is expected to be muted for them this time around. And obviously, if the management says anything, any official statement on the fundraising plan that they intend to do, we look forward to that as well.
All right, Shefali, thanks so much for that. Wipro is expected to report a weak set of numbers for the June quarter. Top line may remain subdued in addition to margin pressures like that faced by its peers. Agam Vakil is standing by with what the markets are pricing. Agam.
Well, that's right. We are expecting a very quiet quarter for Wipro. In fact, a negative one if you consider the way we're expecting revenues and margins to pan out. So the top line is expected to dip around 2% in rupee terms. The margins are expected to contract about 100 basis points to around 16.8%. And profits could very well decline by as much as 7% on a quarter-on-quarter basis. In terms of the top line, we are looking at a little bit of a dip because of the divestment of Workday, which will put in a little bit of a gap when it comes to revenues for this particular quarter. However, in terms of expectations, given the fact that they have projected IT services revenues with a -1% to 1% growth as far as this quarter's guidance is concerned, should very well be in that, at least as far as in dollar terms is concerned. But going forward in the second quarter, analysts are expecting the company to guide for 0.5 to 2.5% growth going going in. Coming down to margins, well, they're expected contract for the same reason we have seen in the case of Wipro's peers, TCS and Infosys, wage hikes, higher visa costs, as well as a strong rupee against the US dollar. What we are keeping an eye on is, well, the financial services sector, because we've got mixed cues. While some companies have done well, some companies haven't. So we'll be watching out for that. Besides that, sustainability of margins, and also keeping an eye on healthcare and communications vertical for Wipro, because those are critical segments for them. On the whole, we're expecting a quiet quarter from Wipro.
Welcome, thanks for that. News is flashing on your screen. The Bimal Jalan Committee, or the panel on the excess capital framework, is submitting its report to the Reserve Bank of India. The report is to be submitted soon to the Reserve Bank of India. We learn that the amount will be transferred in over 3 to 5 years in tranches. We do not know the quantum of the amount. All we know is that the funds will be transferred to the RBI, or rather to the government, in about 3 to 5 years over several tranches.
Just one more. I think Nikunj is just putting out that there could be differences between the panel members, which will be reflected in the final report. So far, everyone thought that they'll find a middle ground, but maybe there is a dissenting view from one of the other panel members that will be included.
Let's wait and watch how the story unfolds. Meanwhile, India's consumption story is showing signs of fatigue. Market research giant Nielsen says the FMCG value growth is inching towards a slowdown after it fell to 10% in the first quarter of the financial year. Charlene D'Souza joins us with more details on what Nielsen has forecast.
Yeah, Harsha, in the April-June quarter, Nielsen has said that FMCG's value growth in India has fallen to 10%, and has said it's inching towards a slowdown. But the sector's growth trend is largely dampened due to a fall in volume growth, which has moved down by 3.6 percentage points from 9.9 in the January-March quarter to 6.2 in the April-June quarter. Now, the market research firm also says that rural growth is slowing down, and which was earlier growing at a faster pace compared to urban. It's now moved to the same pace as that of urban in the last few quarters. At the beginning of the year, the demand was seen softening mostly in essentials, but now even other categories like other food categories like biscuits, salty snacks, and also non-food categories are witnessing a slowdown. Then the slowdown is largely driven due to a slowdown in the western and the northern parts of the country. Now, the states which are witnessing a higher slowdown are Haryana, Madhya Pradesh, Uttar Pradesh, Maharashtra, and Assam. Now, the key macro indicators like slowdown in rural output, reduced government spending, and untimely rains in northern India are pointing towards the slowdown. Then even they have revised their outlook for 2019. They have downgraded it, reduced it to 9 to 10% for 2019, which was earlier in the range of 13% or so. Now, food categories, the food category is expected to grow at 10 to 11%. The home category is going to grow at 7%, and the personal care is expected to grow at 8%. Now, also the outlook for the next quarter stands at 7%, and in the July to December, the second half of the year, the sector is expected to grow in the range of 8%.
All right, Charlene, thanks so much for that. The Supreme Court has allowed the Karnataka Speaker to take his time in deciding the fate of 15 rebel MLAs, but the Apex Court has also said that these legislators can't be forced to attend the Assembly till the Speaker decides on their resignation. Arpan Chaturvedi joins us with more details. Arpan.
That's right, Ira. So, in effect, basically, in this case involves the question of to what extent can the Supreme Court direct another constitutional body, which is the Speaker's office, to act in a particular way. And the court has said that these are questions that need to be deliberated in detail, and of course, that particular question will be heard later. But as far as this specific case of the Karnataka MLAs is concerned, the court once again has chosen to not issue any directions until the Speaker acts. So what they have said is that the Speaker does not have to abide by any timeline, because that was a demand of the MLAs. They wanted the direction from the court that the Speaker should decide on their resignation within a stipulated time frame. The court has declined to pass that order. But more importantly, what the court has said that the rebel MLAs also cannot be compelled to attend the assembly proceedings. And why is that important is because there's a trust vote which is scheduled to take place tomorrow, and that of course and which is why the Speaker's office had also received some disqualification petitions against the MLA. So in this particular question, the Speaker does not have to act in any specific time frame. The MLAs cannot be compelled, but as far as the status of the disqualification petition is concerned, there is no word on that, because there's also a key question as to whether the Speaker should act on the resignation petitions first or the disqualification proceedings, and the Supreme Court interim order has said nothing on that. What the court has said is that once the Speaker decides on that, then his decision has to be submitted to the court, and then of course the further proceedings will take place. But as of now, the MLAs are not compelled to attend the assembly proceedings, and most importantly the trust vote, which is scheduled for tomorrow.
Nikunj, thanks for that. Let's also hear out what Rebel MLA's counsel Mukul Rohatgi had to say after the judgment was read out.
The matter will be fully thrashed out at a later date, but in view of the trust vote which is kept for tomorrow, the court has issued two directions. One, that the MLAs will not be compelled to attend the House tomorrow. All 15 of them, 10 original and 5 more who have joined with Mr. Anand Singh and others. All 15 are given the liberty that they may go to the House or they may not go to the House tomorrow. They cannot be compelled. Right. Therefore, the whip issued against them, purportedly a 3-line whip, asking them to attend, is not operative in view of the judgment of the Supreme Court. Second, the Speaker has been given time to decide the resignation as and when he wants to decide. But the most important part is that 15 MLAs are not compelled to go to the House tomorrow and vote in a particular manner. It is in accord with the submissions that I had made yesterday for 15 MLAs that we do not wish to attend the House and vote in a particular manner. We wish to resign. Therefore, if these 15 MLAs do not attend the House, the result of the trust vote is obvious.
All right, just going back to that update on the Bimal Jalan committee finally submitting or finalizing its report on the RBI's economic capital framework. Nikunj Ohri is joining us on the phone line with what has emerged so far. Nikunj.
Right. The report of the RBI panel on RBI's economic capital framework has been finalized today by the panel members, and the report is soon going to be submitted to the RBI. And the panel today has recommended that surplus of the RBI, or the reserves that RBI currently holds, be transferred to the government in tranches, and these tranches would be the funds would be transferred over a period of 3 to 5 years to the government. And there are also some differences among the panel members. Remember, we reported, the Bloomberg Quint had reported that Economic Affairs Secretary is not agreeing with the amount that was finalized by the panel member to be transferred from the RBI to the government. Over to you.
All right, Nikunj, we'll leave it there. Thank you so much for joining us. Out of time on the show. Thank you so much for joining us today.
How many places can you be at